Hello, my dear students. Welcome back. So, in the previous sessions, we are successfully done with the chapter Introduction to the Auditing. And what exactly we have understood in that chapter? We got familiar or we got to know about the basic definitions or basic terms which are used throughout the subject of the auditing. So we did not discuss any advanced concepts. We did not discuss any in-depth concepts. We did not had any such discussion. Just we had understood the basic terms, the meaning of the terms, the definition of the terms. Apart from that, nothing else we have done. So now we are going to start our second chapter, and the title of the second chapter, as you could see here on the screen, the title of the second chapter is Nature, Objective and the Scope of Audit. What is the title of the second chapter, guys? Nature, Objective and Scope of Audit. See, let me first put before you what exactly is going to be the agenda for this chapter. So very simple, what we are going to discuss here in this particular chapter is, see, in the previous chapter, Introduction to Auditing, we got familiar with the basic terms, no? We understood what is the meaning of the audit, what is the meaning of the financial information, what is the meaning of the term expression of opinion. So all these basic terms we have understood. Now, on the understanding of that basic terms, we are going to build the basic concepts of the auditing. We just got to know alphabets of the audit in the previous chapter. Which chapter? In the introduction to auditing, we just got familiar with alphabets of the subject. So now we are going to build the concepts on it. Like if I give you a brief about what exactly we are going to discuss in this chapter, Nature, Objective and Scope of Audit. So we will be discussing associated and interconnected topics with the audit like if you are expressing opinion, what points you will try to consider, what will be the scope of the audit, what are the aspects which are required to be covered in the audit, what should be the qualities of the auditor, what are the various types of audit, and apart from that, what ethical requirements he has to comply. So like that, basic concepts in the auditing we are exactly going to discuss here. That is what the agenda for this chapter. See, there is no specific introduction required for this particular chapter. Why? Because each and every question is in itself a different concept. So this is what the simple introduction which we can have for this chapter. So in the introduction to auditing chapter, we just got familiar with the basic terminology. Now on the basis of that terminology, we are going to build on the further more concepts in the subject of audit. So that is what the agenda for this chapter, Nature, Objective and Scope of Audit. But before I take up any further discussion, before we start understanding that basic concepts of the audit, I want you to introduce to a concept called standards on audit, or standards of audit also you can say SAS. So I want you to introduce you to this concept called standards on audit. Now what are the standards on audit? So standards on audit are actually the source from which our entire subject has been taken from. Standards are audit are nothing but what? A combined source, a single source from which all our content has been taken from. So the source for our entire syllabus is nothing but standards on audit. So like if you have access to the material now, whatever material you have seen here, from where this material has been taken from, you all will say, sir, this material, the source is ICA study material. Now I will ask you a counter question. From where did the ICI get all this content from? In our CA Inter study material, from that study material, I have built this material for our classroom discussion. But from where the ICA has got this content from? So even ICA has also taken the content from standards on auditing only. So whatever content we are discussing or we are about to discuss in this particular chapter, almost all 80% of the content has been taken from something called standards on audit. The remaining 20% of our syllabus has been taken from other practical concepts like Companies Act or Cooperative Societies Act or some other practical concepts. So out of our entire syllabus, 80% of the syllabus has been taken from standards on audit. Now, what are these standards on audit? Let us try to spend some time in understanding this matter. See, as we all know, when you prepare the financial statements or when you are maintaining the books of accounts, you are required to maintain books of accounts or prepare financial statements according to some set of rules and regulations. Do all agree with me? So that rules and regulations are nothing but you follow accounting standards. So first let us start with what we are familiar with. We all are aware accounting standards. What are accounting standards? So if you ask me, accounting standards are nothing but they contain principles, they contain rules, or they contain some regulations which are required to be followed by the entities in the preparation of the financial statements. That's what will be there in the accounting standards, no? So our objective is to understand standards on audit. But before we understand standards on audit, I am first making you familiar. First, I am taking up the discussion which you are all familiar with. What is that? Accounting standards. So accounting standards contain the principles, rules, regulations which are required to be followed in the accounting process, that is in the financial statements and books of accounts process. So you have read various accounting standards like AS1 disclosure of accounting policies, AS2 talking about valuation of inventories, AS3 talking about cash flow statements, AS9 revenue recognition. So like that multiple standards we have seen. Now I have a basic question for you. Why accounting standards? Why do we need accounting standards? What has led to the introduction of these accounting standards? Can anybody answer? Why these accounting standards as a concept came into existence? Why do we need accounting standards first of all? Can anybody answer? Very simple. Assume that there are no accounting standards. There is no such thing called accounting standards. Then what will happen? Why? Because that will make us realize the importance of accounting standards. So first let us imagine a typical scenario where there is no such a thing called accounting standards. Then what will happen? Let us have a look at it. Assume that there are two entities belonging to the same industry. So let me take automobile industry. So two companies belonging to the same automobile industry. One is Maruti Suzuki, other one is Tata Motors. Now assume that there are no accounting standards, but these companies will prepare financial statements. No, see, Maruti Suzuki will prepare financial statements. Tata Motors also will prepare financial statements. Now I'm a prudent investor. I'm about to invest. I know that automobile sector is going to make good future, good fortune. The shares of the automobile companies will increase in the future. So I have some 1 lakh rupees of money with me. I want to invest that money in one of the automobile company. Either I can choose Maruti Suzuki or I can choose Tata Motors. Now I have to take a decision. So how I will take the decision? By doing comparison. Sir, what I will compare, sir? The only information which I will have for comparison is financial statements. So I have taken financial statements of Maruti Suzuki. I have taken the financial statements of Tata Motors. But the problem here is, as we have assumed, there is no concept of accounting standards. So when there is no common principle called accounting standards, then what will happen is every company will have their own set of rules and regulations in the preparation of financial statements. So if there are no accounting standards, obviously there will not be any AS2 also. When AS2 is not there, every company will value their inventory using different bases. See, I came to know that in the financial statements of Maruti Suzuki, the Maruti Suzuki company has valued their inventory at cost. Whereas Tata Motors have valued their inventory at NRV. Some other company like Mahindra and Mahindra, they have valued their inventory at average of cost and NRV. So if there is no standard set of rules and regulations, each company will prepare the financial statements according to their own set of rules and regulations. They don't follow common principles. Whatever they feel like, they will do it. Now I am taking this financial statements of Maruti Suzuki. I am taking this financial statements of Tata Motors, which are prepared according to different rules and regulations. Now tell me, if I compare such a kind of financial statements, will my comparison, will it be fruitful? Completely waste comparison you are doing. That comparison will not lead to any valuable decision. See, if the comparison between two things has to make sense, then the two things which you are comparing should be uniform. So I can't compare a CA inter student's knowledge with CA final student's knowledge. That comparison will be completely waste comparison which I am doing. Similarly, if I am comparing two financial statements, that comparison will make sense. That comparison will be valuable only if two financial statements are prepared as per same set of rules and regulations. If the financial statements are prepared as per different set of rules and regulations, and if you compare those financial statements, that comparisons, the value addition which you will get from comparison is zero, completely zero value addition you will get it. So that's why we have accounting standards. Now the purpose which I want to say here is accounting standards main purpose is to bring uniformity in the financial statements. What is the main purpose of the accounting standards, guys? To bring uniformity, consistency in the financial statements. See, since today we have accounting standards, when we are comparing the financial statements, today we don't get doubt. We don't have suspicion whether these two companies have prepared the financial statements as per same rules. Today we don't get that suspicion. Why we don't get that suspicion? Why? Because today we have a standard set of documents called accounting standards, and we know that each and every company must follow it. So today we will not get that suspicion. We are very comfortable in comparing the financial statements of two companies because the uniformity has been achieved today. The consistency has been achieved today. What brought that uniformity and consistency in the financial statements? Accounting standards has brought the uniformity and consistency in the financial statements, which will make the comparison valuable, which will make the comparison sense. So the main objective of introduction of accounting standards is to bring the uniformity. And one more purpose why accounting standards have been introduced is to provide guidance on complicated accounting matters. So during the course of accounting, during the course of financial statements, sometimes there will be complex issues. So professionals might get doubt. How to treat this item? How to treat this particular item? What should be the accounting treatment? Should it be treated as capital expenditure or revenue expenditure? So like this, regarding certain items of the financial statements, sometimes people in the industry might get confused. So in such complex areas, guidance also will be provided by accounting standards. So accounting standards are going to fulfill two purposes. One is they bring the uniformity in the financial statements. Number two, they will also provide guidance in the complex accounting related matters. So this is what the purpose of accounting standards. See why we are discussing about accounting standards? Because my objective is to explain standards on auditing. For that, first we have seen what is the purpose of accounting standard. So we understood what is the purpose of accounting standard. Now, if you look from the perspective of audit, audit is also one of the professional area of practice. In auditing also, we need uniformity. In audit also, sometimes we need uniformity. Like for example, in the previous chapter I told, the auditor's ultimate objective is to express an opinion. What is the auditor's ultimate objective? To express an opinion. And when I say auditor should express the opinion, that expression of opinion will not happen orally. That expression of opinion will happen in the form of a written document. I will prepare a report. If I am conducting audit of some company, my ultimate objective is to express the opinion, but that opinion I will not just come before the mic and say like this. I can't just upload a YouTube video on my YouTube channel. So that opinion need to be expressed in the form of a written document. That I call it as audit report. Now don't you think even this audit reports also should be similar? Don't you think audit reports also should be similar? Or should the audit reports be prepared according to the according to the own set of rules and regulations of every auditor? Like for example, take the same example, Maruti Suzuki, Tata Motors. Now, some investor like you and me, we have taken audit report of Maruti Suzuki, we have taken audit report of Tata Motors. See, if both of these audit reports are prepared according to different set of rules and regulations, can an investor will be able to compare that audit reports? Definitely not. So like the way we needed uniformity in the accounting matters, there is a similar requirement for uniformity in the auditing related matters also. Like the way accounting standards are bringing uniformity in the accounting matters, similarly, auditing standards are also bringing uniformity in the auditing related matters. So what is bringing uniformity in the auditing related matters? Auditing standards on auditing are bringing that uniformity. And one more thing, like the way in the accounting, when we come across complex accounting matters, as we look for guidance, similarly in the area of auditing also, sometimes auditor might experience difficulties while conducting the audit. Sometimes they might get confused what exactly needs to be done in the given case, how to do the audit. So like that they might get confused. So in respect of that complicated matters regarding audit also, like the way accounting standards are providing guidance in the accounting matters, similarly standards on auditing also will provide guidance to the auditors when they come across complex areas in the audit. Understood everybody? So like the way accounting standards, whatever purpose accounting standards are fulfilling in the area of accounting, the same purpose will be even fulfilled by the documents called standards on audit in the area of auditing. Understood? So this is what the standards of audit are. Understood? So all the background discussion I have told just to make you realize that the source, whatever we are discussing, sorry. So this all discussion we had just to make you realize that whatever we are discussing in this subject called audit, the source for all this content has been taken from the documents called standards on audit. So as I was referring, almost all 80% of the syllabus, whatever we are going to discuss in this subject, everything has been taken from standards. The remaining 20% is from other than standards, like the chapters of company audit, audit of various entities, audit of items of financial statements, bank audit. Like that, there are a few chapters where the source is not actually standards. Those are practical concepts or legal laws and regulations. But 80% of the syllabus, whatever we are discussing, that has been completely taken from those standards only. And the chapter which we are about to discuss now, which is a nature, objective and the scope of audit, that is what the chapter title no. So we are done with introduction to auditing. Now we are supposed to start a chapter called nature, objective and scope of audit. So from where this chapter has been taken from? Even the chapter nature, objective and scope of audit has also been taken from standards on auditing only. And the two standards from which this chapter has been taken from are SA 200 and SA 201. These are the two standards. Sorry, not SA 201. So sorry, SA 210. Just a minute. So the two standards from which the chapter nature, objective and scope of audit has been taken from are what? SA 200 and SA 200 and SA 210. So when I say I am teaching you the chapter nature, objective and scope of audit, I am nothing but taking you through the content from these two standards, SA 200 and SA 200, SA 210. Now one more point to add here. See, when it comes to numbering of the standards on auditing, it is a bit weird numbering. The numbering of the standards on auditing is a bit weird. So if you look at the accounting standards start from AS1 and all the accounting standards will be in a sequence. Like we'll have AS2, AS3, AS4, AS5. So like that, all the accounting standards will be in a sequence. They will follow an order. But the problem with the standards on auditing is standards on auditing do not have any sequence. They are very randomly scattered. And like the way accounting standard is starting from AS1, but we have standards on audit which is starting from SA 200. What is the first and foremost standard on auditing? SA 200 is the first and foremost standard on auditing. Sir, what about earlier standards, sir? Sir, what about 1 to 199 standards, sir? Not there. There are no standards from 1 to 199. So like the way AS1 is the first and foremost accounting standard, similarly SA 200 is the first and foremost standard on audit. Sir, after this, which standard? Do we have SA 201? No. Do we have SA 202? No. So after SA 200, the next standard which we have is SA 210. After this, we have SA 220. Now you might come to a conclusion, okay, the standards might follow 10 series. But let me, that assumption is wrong actually. So we have SA 220, then we have SA 230, we have 240, we have 250, in between we have 260, then we have 265. And then we have altogether directly 299. That's all. These are the standards under 200 series. Then after that, 300 series of standards will start, which will start from SA 300, 315, 320, 330. Then we have somewhat 400, 405, etc. Then we have 500, 501, 505, 510. So blah, blah, blah. So like this, we have various standards. So the point which I want to make here is, like the way accounting standards are all in one order, standards on auditing will not be in an order. Like the way AS1 is the first and foremost standard on accounting, we have SA 200, which is the first and foremost standard on auditing. Don't worry about that, about all this numbering. So if you listen to the classes carefully, I will make sure that you will memorize all the standard numbers. That will become your second nature. No need to put any extra effort for that. As a part of discussion, we will always be giving reference to the standard and discussing. So through this classes, you will all become familiar with the standard numbers and what each standard deals about. No extra effort you are required to put to remember the standard numbers. Understood. Now you all will ask me, sir, what is the logic why the standards on auditing do not follow any specific numbering? This logic will be answered once we take up a chapter called standards on audit. We have a dedicated chapter talking about standards on auditing. There I will let you know why the numbering is like this, why the standards on auditing are not in a proper order, the logic, the reasoning for that I will let you know once we take up the chapter called standards on auditing. But till that point of time, just remember only this fact that the standards will not follow any specific order. So this is what the introduction regarding this particular chapter. So we are going to start now the content from nature, objective and scope of audit. In fact, we are actually discussing the content from two standards. One is SA 200 and we are discussing the content from SA 210. Clear everybody? So let us now go into the contents of nature, objective and scope of auditing chapter. Clear everybody? Right. So let me open the material and let us start doing it. Yeah. So this is what the chapter. So many questions will be there, somewhere around 20 questions or there. So we will take up each question at a time and we will start discussing the content from that question. I hope everybody is clear with the introduction, whatever we had till now. So let us start now with question number 1. What is question number 1 asking? Define the term audit. Also explain the points which the auditor should consider before expressing an opinion. So straight away question. So two questions are asking. One part of the question is asking us to write the definition of audit. Do we all know this already? Yes, we all know this. And I do hope that you all would have memorized the definition also. There is no need to put an extra effort to remember the definition of audit. To the extent I know, you all would have already memorized the definition of audit. So for one last time, please repeat for me what is the definition of audit. So as we have seen in the previous chapter, audit is an independent examination of financial information of any entity, whether or not profit oriented, irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon. This is what the definition we have understood. Yes, this is what the definition we are done with. Now let us come to the other part of the question. What does the other part of the question ask you? Explain the points which the auditor should consider before expressing an opinion. So from the definition of the audit, we all know that ultimate objective of the auditor is to express an opinion. Now the question which they are asking is, agreed, your ultimate objective is to express an opinion, but before expressing an opinion, as an auditor, what points you will consider or what points you will verify? This is what the question. Before you ultimately express the opinion, we all know the ultimate objective of the auditor is to express an opinion. But being an auditor, before expressing an opinion, what points you will consider? Some minimum points we will check, no? So what points you will check before expression of an opinion? Clear everybody? Now, before coming to the answer, what are the main points which are required to be considered before expression of opinion? First, we will try to understand what is the purpose of the audit altogether. Why audit as a function has been introduced? What is the purpose of audit? So let us try to understand it. So in order to make us understand this purpose of the audit, let me ask you a few questions. So which we have already covered in our previous chapter. Who will prepare financial statements, guys? It is whose responsibility to prepare financial statements? Management or auditor? So we all know that management will prepare financial statements. But caution here, theoretically. Whatever we are discussing, management will prepare financial statements. This is theoretic discussion. But once you start practicality, you will observe something else. So which I don't want to keep in this public domain. But whatever it is, financial statements, the responsibility for preparation of financial statements is management. We all know management of the organization will prepare financial statements. Let us take for example Reliance Industries Limited. The management, when I say management of Reliance Industries Limited, who will come in the definition of management of Reliance Industries Limited? The board of directors will come in the definition. So this Reliance Industries Limited shall prepare financial statements. Who will prepare that financial statements? The management, that is the board of directors of the company will be responsible for preparation of the financial statements. Now once the financial statements are prepared, they will be used by different users. This also we have covered. Who are various users of the financial statements? The users could be shareholder, the users could be management once again, the users could be bankers, the users could be creditors, the users could be government, plenty of users will be there. So financial statements will be prepared by the management and that will be used by various users for their decision making purposes. Let us take one particular user here. Shareholder is one of the user. So now management prepared the financial statements and assume that the management, after preparing financial statements, those financial statements are directly given to one shareholder. Management prepared financial statements and those financial statements are directly given to one of the shareholder. Now the shareholder wants to use that financial statements for his investment decisions, whether to invest in the company or not, whether to sell the investments or he can continue investing in it. That decision he has to take. But here there is a problem. See, if the financial statements which are prepared by the management, if they are directly given to the shareholders will not have confidence in the financial statements. The shareholders will not be able to trust the financial statements. Not just shareholder, any user you take, if the financial statements prepared by the management are directly given to any users, the users will not have confidence on that financial statements. They will not easily believe that financial statements. Why, sir? Why? Because as we all know, the management in the organization will have various functions. What will be the functions of the management? They run the business. They do decision making, day-to-day decisions they will take. They look after accounting process. They prepare financial statements. Sorry. So what do? They just a minute. So they run day-to-day business, they make decisions, they manage the accounts, they prepare financial statements. They are also looking after, they're also responsible for looking after shareholders' grievances. So these many responsibilities will be fulfilled by the management. So if you observe here carefully, the management is only running the business. Which assets to buy, which assets to sell, how much revenue to make, how much production should happen, how much profit margin should be. So all these decisions are taken by the management. Now that financial information is only presented in the financial statements, and that financial statements are also getting prepared by whom? Management. So here management is only running the show. The management is only running the business. The management is only making decisions, and the management is only preparing the financial statements. If that is the case, whatever financial statements given by the management, what is the guarantee they contain the correct information? How the shareholder will get that confidence? Definitely he will not. See, if you are a shareholder or if I am a shareholder, I will definitely get a doubt that management in their balance sheet, like we had a look at the balance sheet of the Reliance, there are 8 lakh plus crores of assets. So or no? When we had a look at the balance sheet of the Reliance, the balance sheet shows 8 lakh crores of assets are there. Obviously, I will get a doubt whether really in the company 8 lakh crores of assets are really there, or there could be a possibility management might be overstating their assets. Because being a shareholder, I don't know what is exactly inside the company. No, being a shareholder, what is only my right? I will have invested my money in the company. Once in a while, I can go to general meeting, participate in the decision making of the general meeting. Hardly that's what I can do. Just because I'm a shareholder, I can't go inside the premises of the company on a day-to-day basis. Just because you buy one share of the Reliance by paying 2,500, Ambani will not call you every day before taking any decision. No, you will not be contacted. So you are just a shareholder. Your right is just restricted to once in a while go to the general meeting and attend that. That's what your right. You will not be permitted to involve in the day-to-day business. You will not be consulted before any decision making. So if the Reliance Industries Limited management, if they have shown in their balance sheet the assets are 8 lakh plus crores, what is the guarantee really that much assets are there? If they're showing the turnover is 4 lakh plus crores, what is the guarantee really that much turnover has taken place? If they are saying they have made a profit of 35,000 plus crores, what is the guarantee really that much amount of profit is there? How can the shareholder believe? Definitely not. Why? Because management is running the show. Management is only preparing the financial statements. So industry has realized it. Management is preparing financial statements, but users are not having confidence on that financial statements. They are having doubts. So what the industry has thought is, after the financial statements are prepared, but before they reach any user, in between, an independent qualified person should verify that financial statements. That process we call it as audit. So what the industry thought? So in order to increase, in order to enhance the confidence of users of financial statements, once the financial statements are prepared by the management, before they reach the end user, be it shareholder, banker, or anybody, so before they reach the shareholder or any user, in between, some independent qualified person should come and verify whether that financial statements prepared by the management are genuine or not, and he should express his opinion. Then if they are given to the shareholder, then they will have more confidence on that financial statements. And who is that independent qualified person? Whom we call it as auditor. And generally, who will be acting as an auditor? Chartered accountants. We chartered accountants, we are qualified people, we are knowledgeable person, we have all the knowledge required to understand the financial statements, we have all the knowledge required to interpret the financial statements. So such an independent qualified person, before the financial statements reach the shareholder, they will verify and they will express the opinion. Once the financial statements are verified by the auditor, then they become audited financial statements. And if this audited financial statements are given to the user, that is going to enhance the confidence of users of financial statements. That is going to enhance the confidence, that is going to increase the confidence of users of financial statements. Sir, how come audit will increase the confidence? Why? Because auditor is also providing commercial activity only. No. Why auditor will be verifying financial statements? For charity will he be doing? No, for money he will be doing. Now there could be a possibility auditor might have joined hands with the management and expressed a wrong opinion also. Then why should the shareholder trust, sir? Why today shareholders are trusting the auditors, sir? Why? Because they will all have confidence that if any auditor commits any mistake, their regulatory authority will take the responsibility. Who is our regulating authority? ICAI is our regulating authority. They all know that if we do something wrong, ICAI will take the action against the chartered accountants. So that's why all the people will have, all the users are having a confidence on auditors. Clear, everyone? So this is what the purpose of the audit. Like if you have a look at the answer, the purpose of audit is to enhance, is to increase the confidence of users of financial statements, because they are verified for accuracy and authenticity. Authenticity means genuinity by an independent qualified person. So if someone asks you what is the ultimate purpose of the audit, what you are going to say? I am going to say, or you are going to answer that the ultimate purpose of the audit is to enhance confidence, to increase the confidence levels of users on the financial statements, because they are verified by independent qualified person called auditor to determine whether they are accurate, to determine whether they are genuine. Clear? That is what the purpose. Now, one more thing which we need to understand. See, the main question is what? Points which are required to be considered before expression of opinion. I did not explain it the main question. So first we understood definition, which I have already done it in the previous class. Then we understood what is the purpose of the audit. Now, before I come to the main answer, there is one more point which I need to explain, which is this D point. Auditor is expressing opinion, but he is not giving any guarantee. Auditor is just giving a what? Opinion. If you look at the definition of the audit, what we have told in the definition, what is the ultimate objective of the auditor? The ultimate objective of the auditor is to express an opinion. Auditor can only express an opinion. The opinion of the auditor can't be taken as a guarantee regarding two things. The opinion which is expressed by the auditor can't be taken as a guarantee for two things, which is number one, auditor's opinion can't be taken as a guarantee regarding future viability of the entity. Auditor's opinion can't be taken as a guarantee regarding future viability of the entity. Similarly, auditor's opinion is not a guarantee regarding efficiency and effectiveness of management. I will explain with the example. Don't worry, just keep on following. So the opinion which will be expressed by the auditor, it does not guarantee two things. What it does not guarantee? It does not guarantee future viability of the entity. Also, the opinion expressed by the auditor is not a guarantee regarding efficiency and effectiveness of the management. What does that mean? Let us come to the first part, future viability. Future viability means future continuity of the entity. So assume that I am conducting audit of some company X Limited. Being a chartered accountant, I have been appointed as auditor. I have been given an assignment to do the audit of X Limited client. I did the audit of X Limited client and I'm ultimately required to give the opinion, no? So as I have told, opinion can be only of two types, either a positive opinion or negative opinion. So being a chartered accountant, after conducting audit of this client X Limited, I gave a positive opinion. I did not find any material misstatement, and also the financial statements are prepared as per applicable financial reporting framework. No mistake, no error, no fraud, I am able to find it out. So I gave a positive opinion. I told that financial statements of this company 2021-22 are giving true and fair view. So someone has read this audit report, some shareholder, some potential investor has read my audit report. So in my audit report, I have told financial statements are giving true and fair view. So someone has read this audit report and some Mr. X has read this audit report. Now reading this audit report, he thought that, okay, auditor is saying financial statements are giving true and fair view. So let me invest my money in this company. So this person, Mr. X, after reading my audit report, he invested some 1 lakh rupees of money in the company X Limited. He bought the shares of the company worth 1 lakh rupees in the company X Limited. Now he has invested the money, but then all the bad time has started. The company has made bad business. It has incurred so many losses. There are so many business failures. It has faced so many legal issues, whatever may be the reason. So the performance of the company has become very bad. And as we all know, when the company's performance becomes bad, the share price will be impacted. Now the share price has started continuously falling, and this person, Mr. X, who has invested 1 lakh rupees, now the value of the investment has become hardly 10,000. Why? Because the share price has fallen drastically. He bought some 100 shares at the price of 1000 rupees. But now what happened is, because of bad business and all, it has become, share price has become 100. Now the 100 shares has worth only 10,000 rupees. So if you observe, out of this investment transaction, Mr. X has lost 90,000 rupees. What is the loss of Mr. X? It was 90,000 rupees. So Mr. X incurred a loss of 90,000 rupees. Generally, obviously, whenever you see that much loss in your demat account, frustration will pile up. Definitely, no, your hard earned money, you invested all your money in the company. Now the share price has fallen. So 1 lakh rupees just in front of your eyes, 90,000 got evaporated. Any ordinary person will be frustrated. Definitely, this person, Mr. X, is also frustrated. Now he thought and sat down and thought, why I have invested my money in the company? Now he realized that he read my audit report. What he has done? He has read my audit report. That is the starting point. He read my audit report and invested his money in the company, and that's why he lost the money. And we all know, in such cases, psychology blames only one person. So what this person, Mr. X, thought is, I have invested my money just because reading this auditor's report. Because of him, I suffered 90,000 loss. He got so frustrated, he can't control his frustration. He went to the court and filed a case in the court of law. He filed a case against me. He told this auditor, this chartered accountant, verified the financial statements, told that financial statements are giving true and fair view. Believing his opinion, I invested my 1 lakh rupees in the company. But after that, I lost all my money. 90,000 rupees I have lost. So just because I have invested by believing this chartered accountant's opinion, now he should compensate me the loss. He's asking 90,000 to be compensated by me. The reason which he is quoting is, he has invested in the company only by reading my audit report. So he is demanding whatever loss he has suffered, that 90,000 rupees loss, he is asking me to pay for that. Now you tell me, now you tell your opinion, am I liable to pay 90,000 to this shareholder? Do you think, being a chartered accountant, since reading my opinion, the person has invested and lost 90,000 rupees, am I be required to pay this 90,000 as demanded by this particular investor? Am I required to pay for that? What do you believe? No, not required. So the point which I'm making here is, the opinion which I have given on what? Financial statements. When I say financial statements, that is a historical information or past or future financial information. So being an auditor, I am verifying financial statements which are actually historical financial information, the information which has already happened in the past. and just I am telling the opinion, whatever financial data which already occurred, whether it is reliable or not, that is the only responsibility of me. When I give opinion, I am not concerned about any future. I have nothing to do with the future of the company. My opinion is regarding past of the company. Yes or no? So if I have conducted the audit of 21-22 financial year, I verified the financial statements of 21-22. That information is already happened. That is a historical financial information, and through my opinion, I am telling whether that 21-22's financial information is giving true and fair view or not. That's it. Nobody can take my opinion. If I am giving positive opinion, nobody should be of a misconception that okay, this auditor is giving guarantee about the future of the company. Am I giving guarantee about the future? What I have to do with the future of the company? I have nothing to do with the future of the company. My opinion is just regarding historical financial information. I have nothing to do with the future of the company. No one can come and complain to me later, you have given opinion, you have told that company's future will be good. Where I have told the company's future is good here? My opinion is just on what? Historical financial information. So that is what the meaning of this particular point. The auditors is required to express opinion, but that opinion is not a guarantee regarding future viability. If I put it in simple terms, in my own language, if I have to put it, if I am giving positive opinion, that doesn't mean I'm guaranteeing that company will have a bright future. I have nothing to do with the future of the company. Understood, everybody? So that is what the meaning of the first point. When the auditor expresses an opinion, it is not a guarantee. There is no guarantee regarding future viability. I am not guaranteeing about any future of the company. My opinion is just on historical financial information. Similarly, whatever opinion expressed by the auditor, it can't be taken as a guarantee regarding efficiency and effectiveness of the management. Now, what does that mean? Let me explain this also with the help of example. Assume if I have given positive opinion on the company X Limited, that means am I giving conduct certificate for the management? If I give positive opinion in the audit on the audit of financial statements of X Limited, does that mean am I giving guarantee that the management of this company or the management of this company X Limited, that is the board of directors of the X Limited, are very honest people, very sincere people, they are very hardworking people, they don't even waste 1 minute of time also. Am I giving any conduct certificate of the management? If I give positive opinion, am I guaranteeing that management are hardworking, efficient, effective? No, you have nothing to do with the management's efficiency and effectiveness. My opinion is only about historical financial information. I have nothing to do with whether management is hardworking, they are lazy fellows. I have nothing to do with that. My positive opinion can't be taken as guarantee that management are efficient and effective. I have nothing to do with that. So the conclusion here is, as an auditor, my objective is to verify only historical financial information and whether that is reliable or not. My opinion can't be taken as a guarantee regarding two things. It can't be taken as a guarantee regarding future viability of the entity. It can't be taken as a guarantee regarding efficiency and effectiveness of management. Understood? Understood it in the complete sense now? So very simple discussion. So that's what there in the last point. Auditor's opinion is not a guarantee. The auditor's opinion, sorry, printing mistake here, change it. The auditor's opinion. So the auditor's opinion shall not be taken as a guarantee regarding two things. What are they? So it shall not be taken as a guarantee as to future viability of the entity, viability in the sense future continuity of the entity, and also it can't be taken as a guarantee regarding efficiency or effectiveness with which the management has conducted the affairs of the enterprise. It can't be taken as a guarantee regarding efficiency and effectiveness of management. It also can't be taken as a guarantee regarding future viability. I'm just verifying historical financial information, and my opinion is just restricted to whether that historical financial information is giving true and fair view or not. That's it. Clear? So till we did not answer the main question. We did not answer main question. So what was the main question? So the main question is, what are the points which are required to be considered before expression of opinion? This is what the main question now. So now let us come to the main question. What are the points which are required to be considered by an auditor before expression of opinion? Shall we try to understand the main answer now? Very simple, guys. Common sense they are asking you here. You have to apply your common sense, nothing else. So as we all know, as an auditor, your ultimate objective is to express an opinion. But before you express that opinion, there are some basic points which you need to consider, some minimum things which you need to check. So what are the basic things which you will check before expression of opinion? So they will say 6 points here. Very simple. The first thing which every auditor should check before expression of opinion is whether financial statements are matching with books of accounts. Whether financial statements are matching with books of accounts. As we all know, financial statements are prepared from which source? There is a source for preparation of financial statements. What is the source for preparation of financial statements? Books of accounts. When I say books of accounts, what will be included here? Journal entries, ledgers, trial balance, all this will be included. See, when the financial statements are getting prepared from books of accounts, whatever information is there in the books of accounts, the same information should be there in the financial statements also. No, there should not be any mismatch. Books of accounts should not say something, your financial statement should not say something else. See, in the trial balance, when I am able to see that the total of fixed assets is 10 crore rupees, in my fixed assets, in my financial statements also, the total of assets should be 10 crores only. It should not be like in the trial balance, books of accounts, in the books of accounts, the fixed assets are 10 crores, but in the financial statements, the fixed assets are somewhere around 8 crores. Can that happen? No, that is conveying wrong information. So any auditor, the first minimum thing which he should check before expression of opinion is whatever financial statements are there, which are given to you by the management, whether those financial statements are matching with books of accounts. Whatever information is there in the books of accounts, the same information should be there in the financial statements. They should not deviate from each other. That is the first point we need to check. Second one. Next, the books of accounts. What is the starting point of books of accounts, guys? Where does this books of accounts will start? It starts with a journal entry. Now, whatever entries are there in the books of accounts, whatever entries are there in the books of accounts, they should be supported by proper evidence. That also we need to check. Minimum point which we need to check. Whatever entries which are there in the books of accounts, they should have appropriate audit evidence. Appropriate evidence we should have. Sir, evidence in the sense what, sir? Like for example, if I am seeing in my books of accounts and purchase entry was written, purchase account debit 10,000 to so and so debtor, to so and so creditor, to Mr. C 10,000. This entry I am able to see. Now this entry should have a evidence or not. To know whether this purchase has really taken place, there should be some evidence. You tell me what will be the evidence? Purchase invoice shall be the evidence. What should be the evidence? Purchase invoice should be the evidence. So I should check whether really this purchase entry is genuine or not by checking the evidence which is a purchase invoice. I am able to see another entry in the books of accounts. Rent account debit. 20,000 rent was paid to landlord, to some landlord Mr. X. 20,000 rent was paid. This entry was there. I want to know whether this really happened or not. I need to check evidence. What is the evidence for that? Rental agreement will be evidence for that. I am able to see some entry relating to insurance premium account debit 5,000 to some insurance company 5,000. I want to know whether this entry really taken place. I should check evidence. What is the evidence? Insurance policy I need to check. So one of the most important thing which I need to check before expressing the opinion is whatever entries are there in the books of accounts, whether they are supported by proper audit evidence or not. This I need to check. So first thing I need to check whether the financial statements are matching with books of accounts. Second one, entries in the books of accounts should be supported by evidence. Third basic thing which I need to check that there should not be any omissions. No entries should have been omitted from the books of accounts. That means nothing should have been ignored in the books of accounts. All the transactions which have taken place should have been recorded. There should not be any omissions. There should not be any duplications. When I say duplication, an entry should be recorded only once. If I am making one sale, that sale entry should be recorded only once. Against one sale invoice, I can't write the invoice 2 times, 3 times, 4 times in my books of accounts. So that is what the meaning of there should not be any duplications, which means one invoice, one entry, one transaction should be recorded only once, not more than once. And also I should check that there are no fictitious entries. There are no fictitious entries. Now, what is the meaning of the term fictitious? Fictitious means fake. There should not be any fictitious entries. There should not be any fake entries. Only those entries which have really taken place, those entries should only come in books of accounts. There should not be any fake entries. So as an auditor, one of the basic things which I need to check before expression of opinion is there should not be any omissions. There should not be any duplications. There should not be any fictitious entries. Similarly, I need to check that whatever information that is getting conveyed in the financial statements, that should be clear and unambiguous. Whatever information that is getting presented in the financial statements, that should be clear, that should be unambiguous, which means it should not create any confusion. If a ordinary person is reading the financial statements, he should be able to understand what has taken place. The financial statement should provide clarity to the user. The financial statement should not provide any confusion to the user. Why? Because you can't expect every reader of the financial statements to be a finance professional. It's a software engineer could be there who is an investor in the company. An uneducated person could be there who has invested his money in the company. So the financial statement should be prepared in such a way that they are clear, easily understandable, and they are not creating any kind of confusion. The management should not try to create any kind of confusion to the reader of the financial statements. So as an auditor, I need to check that the financial statements should be clear, easy to understand, and unambiguous. They should not create any sort of confusion. Clear, everybody? And apart from that, even I need to check whether accounting standards, whether schedule 3 and all other applicable financial reporting framework has been followed or not. One of the basic thing, one of the objective, I need to check whether the financial statements are prepared as per accounting standards, whether they are prepared as per schedule 3, whether they are following all the applicable financial reporting framework requirements. This also is a basic point which I need to check. And finally, I even need to check whether the financial statements are giving true and fair view. Why? Because my at last final opinion is regarding true and fair view of the financial statements only. So these are a few basic points which we need to check before expression of a opinion. But one more thing, guys, this list is just illustrative list. This is not the final, this is not the exhaustive list. These are not the only points which we will check. These are just some examples of the minimum points which we need to check. You can keep on adding the points, like you can check whether accounting policies are applied consistently or not, whether going concern assumption is followed or not, whether accrual basis has been followed or not. Like that, you can keep on adding the points. This list is just illustrative list, not an exhaustive list of what points are required to be checked before expression of opinion. Understood? So whatever points I have explained it here, the same points you'll be able to find it even in the answer. So if we see it, points to be considered by an auditor. So the person conducting this task should take care. Which task? The person whoever is conducting this audit task should take care to ensure that financial statements would not mislead anybody. So as an auditor, when you are conducting the task of audit, you have to take all the precautions to make sure that these financial statements, whatever you are auditing, they should not mislead or they should not misguide anybody. That means they should give proper information. This he can do honestly by satisfying himself. If he wants to know whether financial statements are really not misleading, then he needs to satisfy himself about certain points. That means he need to consider certain points. What are they? The accounts have been drawn up with reference to entries in the books of accounts. Nothing but this is what I have mentioned. You need to check first of all whether financial statements are matching with the books of accounts. Second one, the entries in the books of accounts are adequately supported by sufficient and appropriate evidence. So whatever entries are there which are in the books of accounts, they should be supported by proper evidences. I gave you examples of the evidences also. None of the entries in the books of accounts have been omitted. There should not be any omissions. Everything should have been included. So none of the entries in the books of accounts have been omitted in the process of compilation. Compilation in the sense preparation of financial statements. When you are preparing financial statements, no entry should have been omitted from the books of accounts. And nothing which is not in the books of accounts has found a place in the financial statements. That is nothing but fictitious entries. Whatever has not taken place, that should not come in the financial statements. That means, as I have told you here, there should not be any omissions, there should not be any fictitious entries. Fake entries also should not be there. Even genuine entries also should not be omitted. And the information conveyed by the statements is clear and unambiguous. Whatever information that is getting presented by the financial statements should be clear and unambiguous. That means they should not create any kind of confusion. Right here, the meaning of unambiguous: without any confusion. Clear? Next one. The financial statement amounts are properly classified described and disclosed in conformity with accounting standards. Nothing but whatever financial statements are there which are prepared by the management, they should be prepared, presented, disclosed as per what accounting standards. Nothing but in our simple parlance, if I have to say, whether the financial statements are prepared as per applicable financial reporting framework, that you need to check. And then finally, the last point, the statement of accounts, nothing but the financial statements present a true and fair view. What the financial statement should do, they should present a true and fair view of operational results. Nothing but whether the statement of P&L is showing true and fair view of the results, operational results, in the sense whether the statement of P&L is showing true and fair view of profits or losses happened, and also assets and liabilities, whether the balance sheet is showing true and fair view of the financial position. Nothing but if one simple point, if I have to say, whether the financial statements are giving true and fair view or not. So these are the basic 6 points which every auditor needs to consider before expression of opinion. Clear? So with this we are done with the question number 1. So what and all we have understood in the question? So define the term audit, which we have understood long ago in the previous chapter itself. We have understood what is the main purpose of the audit. What is the main purpose of the audit? To enhance the confidence of users of the financial statements. Then we have seen auditor's opinion is not a guarantee regarding 2 things. What are those 2 things? It is not a guarantee regarding future viability. It is also not a guarantee regarding efficiency and effectiveness of the management. Then finally we have seen what are those points which are required to be considered before expression of opinion. 6 points we have seen: financial statements matching with books of accounts, entries should be supported by evidence, no omissions, no fictitious entries, information should be clear and unambiguous, they should have been prepared as per accounting standards, and the financial statement should give true and fair view. That's all. Clear? Right. Now if you observe, there is one more thing which I want to explain it here. After every question, I have included a section called test your knowledge in the material. For most of the questions I have done this. After each and every question, I have included a category called test your knowledge questions. Sir, what are these test your knowledge questions? See, if you look at the question paper pattern today, if you look at the auditing question paper today, the direct straight away questions are very, very minimum. You will find very minimum number of straight away questions. If I have to say it very honestly, out of all the questions, hardly you will be able to find 10 to 15 marks of direct questions. All the remaining questions are scenario based questions. If you have given an attempt, you will better realize it. They will not straight away ask you the question. They will give you a scenario. You have to analyze that scenario and find out what will be the correct answer for that. So that is what the question paper pattern is today, especially for the subject of audit. So that's why I always put emphasis on getting the conceptual clarity, because gone are those days where you will mug up the content in the auditing and reproduce the same and get qualified in the exam. That used to happen when I was writing the exam. Then it used to happen that if I mug up a few questions, I can write it as it is. Straight away theory questions used to be asked and you can get qualified. But the days have changed now. They will not ask you straightforward questions. They just do, the ICA doesn't just want you to mug up the content, they want to understand you. They want you to understand it and apply it to the given practical scenarios. What ICA is expecting from you, not just mugging up the content, not just spy-harding the content. The ICA is expecting you to understand the concepts, link it with the given case and write the suitable answer for that. So that is what the question paper pattern today. So no straight away questions will be asked. They will give you a scenario and they will expect the answer from you. So in order to make you familiar with that scenario based questions, for your practice, I have included after each and every question how the same question which we discussed can be posed in an indirect way. See, straight away question will look something like this. If they want to ask you straight away question, this is how they will ask. Define the term audit, explain the points which the auditor should consider before expressing opinion. But this is not which will happen in reality. They want to answer this, they want to question you this, but they will not question in such a direct way. The same question can be asked in various ways, various indirect ways they can ask you. So to make you familiar, to make you get ready for the exam, to understand these kind of scenario based questions, so I have included after each and every question test your knowledge category. So let us see how the question which we answered just now can be asked in various ways indirectly. Let us have a look at that. Mr. John has been appointed as a statutory auditor of the company X Limited. So and so person, Mr. John, he is an auditor. He is conducting the audit of the company X Limited. Mr. John is aware that Audit is independent examination of financial information, and ultimate objective of the auditor is to express his opinion on the financial statements. And even this auditor is very well aware that he is required to examine the financial statements, and ultimately he has to express opinion whether the financial statements are giving true and fair view or not. That auditor is aware. Next, explain how a person conducting the audit should take care to ensure that financial statements would not mislead anybody. See, one sentence they are taking from the answer and posing a question. So if you see here we have read this statement, no, the person conducting this task should ensure that financial statements would not mislead anybody. For this, what he will do? That's what they are posing as a question. So this auditor, Mr. John, while conducting audit, what points he should take care to make sure that financial statements would not mislead anybody? That means what points he will consider before expression of opinion. They are not directly asking you this, but after interpreting all this question, you will come to a conclusion that this is what the intention of the examiner. So he's asking as an auditor what things you will satisfy to make sure that financial statements would not mislead anybody, which means what points as an auditor will you consider before expression of opinion. So even if they ask you this question in this manner, then also you are supposed to write the same above answer. Clear? Next, question number 2. An audit is independent examination of financial information of an entity, whether or not profit oriented, irrespective of its size or legal form, when such an examination is conducted with a view to express an opinion. Nothing but first they have given definition of audit. Next, what is the question they are asking? This is not the question. They have given definition. Now comes the question. What is the question? What the auditor is supposed to do to satisfy himself that nothing contained in the financial statements will mislead anybody. Once again, question is same. First they have given definition of audit, then they are coming to the question. What is the question they are asking? What the auditor is supposed to do to satisfy himself that financial statements would not mislead anybody. Indirectly, as an auditor, what points you will consider before expression of opinion. See, these kind of questions will be tested in the examination. I will show you even more examples in the coming question and answers, where they will give a paragraph, 5-6 lines of information they will give in the question. But they have nothing to do with the question. And finally, they will ask the question something else. I will prove it. When we take up the further questions for discussion, there I will show it to you. So they will give a lot of useless content in the question. A question will look a paragraph, 7-8 lines of question will be given. But sometimes it will happen that if you ignore all the main content, if you ignore all the question, just read the last line of the question, then also you'll be able to find the correct answer. So then why is the examiner will give paragraph that lengthy 7 lines, 8 lines of question? Why he will give you all that, sir? Why? Because he want to play with your psychology. So when you look at the question, which is some 7-8 pages of the question, which is exactly half of the exam paper, it will occupy the space of half of one side of the page. You will automatically get panic attack. Some people will get the panic attacks there. Why? Because size of the question will make us afraid. And also one more thing, you will take time, that is killing your time there. So examiner will play with you psychologically by adopting these tactics, but you all please be aware, when the question is lengthy, have such a kind of attitude that since the question is lengthy, answer is going to be very straight away, direct answer, easy answer. So have such a kind of positive vibes, then you will not fall trap to this psychological things which I say is using against you. Clear everybody? So even I will prove you later how the question will be very lengthy, but the question which they will be asking is very much straight away, simple, straightforward question. Understood? So with this we are successfully done with question number 1. So now let us proceed further with question number 2. What is question number 2? What are the objectives of auditor as per SA 200? Now what is this SA 200? SA 200 means Standard on Auditing 200. And as I have told you, like the way AS1 is the first and foremost standard on accounting. See, AS1 is a basic standard which is setting the base for the entire subject of accounting. No. Similarly, SA 200 is also the first and foremost standard on auditing, which is setting the base for entire subject of audit. Now this SA 200 is having certain objectives. SA 200 will give guidance to the auditor. So as per SA 200, there are some objectives which auditor needs to fulfill. So what are that objectives of the auditor which he needs to fulfill as per SA 200? And SA 200 is what? The first and foremost standard on auditing, which is setting the entire base for the auditing subject. Now, before we talk about objectives as per SA 200, first let us try to understand what is the title of SA 200. And one more caution here, guys. The problem is the title of the standards on auditing will be very lengthy. The title of accounting standards will be very small. AS1 disclosure of accounting policies, AS2 evaluation of inventory, AS3 cash flow statement. So straight away very small headings will be there. But if you look at the titles of SA 200, the title itself will be very lengthy. But the fact here is if you understand the title itself, you will be able to easily understand the objective of the standard. Entire objective of the standard will be given in the title only. Like if you see the answer, as per SA 200, overall objectives of independent auditor and conduct of audit in accordance with the standards on auditing. Whatever lengthy sentence which I have read now, that is not some random sentence which I have read. That is the title of the standard SA 200. So whatever I have read now, that is what actually the title of the standard SA 200. What is the title of SA 200? Everybody repeat. Overall objectives of independent auditor and conduct of an audit in accordance with the standards on audit. But if you observe carefully, the title itself will tell you what the standard deal about. So what is the standard dealing about? This standard is dealing about, as an auditor, whenever you are conducting independent audit. As an auditor, whenever you are conducting any independent audit, what will be your overall objectives? What you are supposed to do in the overall audit? And also the second part of the title says, and the standard is also saying that the audit should be conducted in accordance with standards on audit. You should not do the audit as per your own wishes. You have to do the audit as per standards on audit. So what does SA 200 deal about? The SA 200 is setting the base for the entire auditing subject. It is saying that as an auditor, your overall objectives are what? That will be explained in the standard. Along with that, this standard is also telling the auditor to do the audit as per standards on audit, not as per the wishes or not as per his own wishes. So this standard SA 200, while conducting the audit of financial statements, the standard says that the objectives of the auditor are as follows. So as per SA 200, the following are the objectives of the auditor. The following things auditor should fulfill. What are they? Number one, to obtain reasonable assurance whether financial statements as a whole are free from material misstatements, whether due to fraud or error, and express an opinion on whether financial statements are prepared in all material respects in accordance with the applicable financial reporting framework. Does these 2 points sound familiar? Obviously, this is what we have discussed in the first chapter itself, introduction to the auditing. So two objectives of the auditor. What are the two objectives of the auditor, guys? Tell me, what are the two objectives of the auditor? So the ultimate objective of the auditor is to express opinion. That opinion should be on two things: whether financial statements are free from material misstatements and whether financial statements are prepared in accordance with applicable financial reporting framework. The same thing they are trying to say here, whether financial statements as a whole are free from material misstatements and whether they are prepared as per applicable financial reporting framework. We all know it. But here they are using one more new term here. The new term which they are using is the auditor to obtain reasonable assurance. What is the new term they are using? To obtain reasonable assurance. Now we need to understand what is reasonable assurance. So I will tell you dictionary meaning of the term reasonable assurance here. More logical understanding we will have it in the subsequent question. We'll have one dedicated question. There I will talk more about reasonable assurance, but here I will tell you the dictionary meaning of the term reasonable assurance. So they are asking auditor to get reasonable assurance, auditor to obtain reasonable assurance. That means as an auditor, you should get reasonable assurance. Now what is reasonable assurance? First of all, what is the meaning of assurance? What is the meaning of assurance? When I say I will give you assurance, what do you mean by that? You might say, sir, you are giving guarantee. No. Assurance doesn't mean giving guarantee. Assurance means giving you some level of confidence. If I am telling you that I will give you assurance, I'm giving you assurance that if you follow my classes carefully, you have more chances of passing the auditing exam. This if I am saying. So I'm giving you confidence. I'm making you confident that, boss, if you listen to the classes carefully, you have a chance of passing the examination. There are very high chances of passing the examination. So giving that confidence, we call it as assurance. So assurance means confidence. Reasonable means acceptable. Reasonable means what? Acceptable. So the standard SA 200 is saying that as an auditor, you get reasonable assurance. You should obtain acceptable level of confidence. First, you should be confident enough, should have high level of confidence that financial statements are free from material misstatements and they're prepared as per applicable financial reporting framework. If you are not obtaining confident, if I am auditor of some company, if I am myself not confident whether financial statements are free from material misstatements and whether they are prepared as per applicable financial reporting framework, how can I expect the others to believe my opinion? Obviously no. If I am an auditor, if I am myself not confident, if I'm not confident about whether my client's financial statements are free from material misstatements, whether they are prepared as per applicable financial framework, applicable financial reporting framework, if myself I'm not confident, how can I expect the other people to believe my opinion? That will be completely wrong, no? If myself I'm not confident, I'm asking all other people to believe. How come that is reasonable here? How come that is acceptable? So that's why SA 200 is saying that the first and foremost standard says that as an auditor, before you express an opinion, you have to express the ultimate opinion. But while expressing that opinion, first you become confident. First you become confident. First you obtain high level of confidence. First you obtain the acceptable level of confidence that financial statements are free from material misstatements and they're prepared as per applicable financial reporting framework. Then you express the opinion. Understood? So just understand this term regarding reasonable assurance. Reasonable assurance means acceptable level of confidence, and as per SA 200, the auditor should get acceptable level of confidence that financial statements are free from material misstatements and they are prepared as per applicable financial reporting framework. More on reasonable assurance later. So one objective is this: the auditor should have high level of confidence. Next one more objective of this standard is to report on the financial statements. Finally, after conducting the audit, I will have opinion. That opinion should be expressed. How that should be expressed? In the form of a report. So you have to report on the financial statements and communicate as required by the standards in accordance with the auditor's findings. Which means that after completing the audit, you will have various findings, you will have various observations during the course of audit. Like you conducted the audit, you came to know about any fraud, you conducted audit, you came to know about any non-compliances, you conducted audit, you found some errors, you conducted audit, you found some misstatements. Now all these findings are required to be reported or not? Yes. Sir, how to report on that findings, sir? In whatever manner I want, can I report it? No. You have to report all that findings as required by relevant standards on audit. Regarding various matters, there are different standards. Like the way each accounting standard will be talking about a specific issue, auditing standards also, each auditing standard will talk about specific issue. Like if I came to know about any fraud, how to report that fraud, that guidance has been given in SA 240. If I came to know that some laws and regulations are not complied with, how to report it, that is given under SA 250. If I find that inventory is wrong, how to report it, that guidance has been given under SA 501. So whatever your findings are there, how to report that findings, enough of guidance has been given under relevant standards. As per the relevant standards, whatever auditor's findings are there, those findings are required to be reported. Clear, everybody? So these are the two objectives which auditor is having as per SA 200. Number one, to obtain reasonable assurance. As an auditor, you should have acceptable level of confidence that financial statements are free from material misstatements and they are prepared as per applicable financial reporting framework. Number two, whatever your auditor's findings are there, whatever findings you have while conducting the audit of any of your client, those findings you are required to report it. And how to report that findings? As per relevant standards on audit. These two are the objectives which every auditor must fulfill, and which a standard is asking you to fulfill these objectives. SA 200 is asking the auditor to fulfill these objectives. Clear? Now, even this question also can be asked in an indirect manner. So, if you have a look at the test your knowledge questions, interesting question actually. CAN is the auditor of SR Limited. So, name of the auditor is CAN and he is conducting audit of the company SR Limited. The auditor expressed his opinion on the financial statements without ascertaining as to whether the financial statements are free from material misstatements or not. So, what that auditor has done, he has expressed the opinion, but he did not consider while expressing that opinion whether financial statements are free from material misstatements or not. Auditor did not check this. Without checking whether financial statements are free from material misstatements, he expressed the opinion. In your opinion, whether CAN has complied with the objectives of the audit, considering the applicability of relevant standard? So they are asking, keeping in mind what auditor has done, they are asking your comment. Did the auditor comply with the objectives of the relevant standard? Did he comply with the objective? No. Which standard's objective he did not comply? SA 200's objective he did not comply. Why? What is the objective of SA 200? Why? Because SA 200 has clearly told that the auditor has to obtain reasonable assurance whether financial statements are free from material misstatements. But in the question they are saying CAN has expressed the opinion without ascertaining whether financial statements are free from material misstatements. So which objective was violated? SA 200 standards objective was violated. Auditor did not comply with the objective of SA 200. Clear? Now how to present the answer? How you have to present the answer is, first you write objectives. Above answer as it is, you have to write what are the objectives of SA 200, you have to write. Now after writing the objectives of the auditor, then give a conclusion. What conclusion you will give? In the given case, the auditor CAN has failed to comply with the objectives of SA 200. Why? Because he did not ascertain whether financial statements are free from material misstatements. These conclusions also you are supposed to add. So first write the above answer as it is, that these are the objectives of SA 200, write the paragraph, then write a conclusion. In the given case, CAN failed to comply with the objectives of SA 200. Clear everybody? So this is what question number 2 is. So 2 questions we are done. What are the points which auditor required to consider before expression of opinion, and also we are done with what are the objectives of the auditor as per SA 200. Clear everybody till here? I hope so. Now we will try to proceed further with next question. So we will start now. 3 and 4 we will come back to that later. Question number 3 and question number 4 we will come back after some time. So now we will start question number 5. So what is question number 5 about? Explain the various types of audit on the basis of requirements of law. So important concept we are going to discuss now, which is related to various types of audit on the basis of requirements of law. So before I take up this discussion, I would like to ask one simple question to each and every one of you. Do you think audit is legally mandatory? Is it legally obligatory to undergo audit for all organizations? Does each and every organization must and mandatorily should undergo audit? So your parents might be carrying on some small businesses. Does all of your parents undergo audit? Are everybody everybody appointing an auditor to conduct the audit of their businesses? The answer is no. So the answer is pretty much straightforward. Audit is not legally obligatory for any organization. Audit is not legally, not any organization. Audit is not legally mandatory for all the organizations. It is mandatory only for a few organizations. For rest of the organizations, audit is not legally mandatory. So don't be of a wrong perception that each and every entity must undergo audit. No, there is no such requirement. Now, depending upon requirements of the law, the audits are broadly divided into 2 categories. Depending on what we are doing this classification, depending on requirements of the law, audits are broadly divided into 2 categories. Number 1 is statutory audit. Number 2 is non-statutory audit. So on the basis of requirements of the law, we have divided audits into 2 categories. Number 1, statutory audit, and number 2, non-statutory audit. Now, what is statutory audit? What is non-statutory audit? First, we will concentrate on this. So what is the meaning of statute, guys? Statute. Statute means what? Some law, some regulation. Then what could be the meaning of statutory audit? So you are correct. The statutory audit means those laws, those audits which are mandatorily required as per law for the time being in force. Those audits which are mandatorily required to be undergone as per the requirements of any specific law. If any law has made any specific audit mandatory, those audits we call them as statutory audits. The audits which are mandatory under any law for the time being in force. So examples of statutory audit are, number 1, the first example of the statutory audit is company audit. So company audit is a statutory audit. Which law has made it mandatory? Companies Act 2013 has clearly specified that once an entity is registered under Companies Act, all those companies are required to mandatorily undergo audit. So since company audit has been made mandatory under Companies Act 2013, That's why company audit is an example of statutory audit. Or the bank audit, which has been made mandatory under Banking Regulation Act. Which audit? The bank audit, which has been made mandatory under Banking Regulation Act. That is also example of statutory audit. Or audit of insurance companies, which is made mandatory under IRDA Act. That is also an example of statutory audit. Or a tax audit, which is made mandatory under Income Tax Act. That is also a statutory audit. Or GST audit, which is made mandatory under GST Act, is also a statutory audit. So conclusion is simple: whatever audit which is mandatorily required to be undergone as per the requirements of any law or regulation, that we call it as statutory audit. Then what could be the meaning of non-statutory audit? Obviously, non-statutory audits are those audits which are not mandatorily required. Those audits which are not mandatory, or even we can call them by other name, we can call them as voluntary audits. Voluntary means what? Out of your own choice. Law is not saying audit is mandatory, but still, if the client out of his own choice he approaches a auditor and gets the auditor appointed, and voluntarily if he is undergoing the audit of his accounts, that we call it as non-statutory or voluntary audits also we call them. Why voluntary? Why? Because client out of his own choice he is coming, even without any requirement of law, he is coming and getting the accounts audited. So that's why those audits we call them as non-statutory or voluntary audits. Sir, any examples for this? Yes, we have plenty. So what are the examples of non-statutory audit? Sole proprietor's audit. See, sole proprietor is not required to undergo any audit as per the requirements of any law, unless he is required under Income Tax Act or GST Act. Generally, sole proprietor will be not required to undergo any audit. But sole proprietor, voluntarily, he goes to the auditor and says, sir, please conduct my audit of sole proprietorship firm. No requirement. No law is asking you to get your accounts audited, but sole proprietor voluntarily going to the auditor, asking him to conduct the accounts of his books of audit, asking him to conduct the audit of his accounts and financial statements. That is an example of non-statutory audit. Or even audit of a partnership firm. Even a partnership firm is also not required to undergo any mandatory audit as per any law, but still if the partnership firm goes to the auditor voluntarily and asks him to verify the accounts of that partnership firm, that is also a non-statutory audit. Clear, everybody? So this is the first point of difference. If any audit is required mandatorily as per law, that we call it as non-statutory audit. If any audit is not mandatorily required under law, client is voluntarily getting his accounts audited, then we call it as a non-statutory audit. Clear, everybody? Next. So a few more points regarding this statutory and non-statutory audit. First, so we have seen what is the mechanism for audit. Now, next one, who will decide the scope and objective of the auditor? That means what will be the rights of auditor, what will be the duties of the auditor, what responsibilities he has to fulfill, to whom he has to submit the report, what functions he has to perform. So, who will decide the scope and objectives of auditor? Nothing but rights, responsibilities, everything. Who will decide it? So, in the case of statutory audit, the scope and objectives of the auditor will be decided by the respective statute. In the case of statutory audit, the scope and objective of the auditor, that is what are the rights of auditor, what are the duties of the auditor, what are obligations of the auditor, that scope and objective will be decided by the respective statute. Under whatever law the audit has been made mandatory, the same law will decide the objective and scope of the auditor. Like the company audit has been made mandatory under Companies Act, the Companies Act itself will say what will be the objective and scope of the company auditor. The bank audit has been made mandatory under Banking Regulation Act. The Banking Regulation Act itself will say what will be the objectives and scope of the bank auditor. Insurance audit has been made mandatory under IRDA Act. The same IRDA Act will say what will be the responsibilities of the auditor. Understood, everybody? So, in case of statutory audit, the scope and objectives are decided by statute. Whereas when it comes to non-statutory audit, who will decide scope and objective, guys? Who do you think will decide scope and objective? See, here there is no law itself to decide. The audit itself is not mandatory under any law. So definitely no law will say the scope and objective of the auditor. Then who will decide so? It will be purely by way of agreement between auditor and the client. How the scope and objective will be decided? Simply by way of a agreement between auditor and client, which means what? Auditor and client will sit across the table, discuss and come to one mutual conclusion. This is what auditor will do. This is what client will do. So the scope and objective in the case of non-statutory audit will not be decided under any law. Why? Because law itself is not applicable in the case of non-statutory audit. So in the case of non-statutory audit, the scope and objective will be decided simply by way of agreement between auditor and client. So nothing but, if I have to put it in even simple terms, your appointing authority will decide what you are supposed to do in the audit. Like if you are getting appointed as auditor by a sole proprietor, the sole proprietor will say what will be your objective and scope. If you are conducting audit of a partnership firm, the appointing partners will say what you are supposed to do in the audit. So it is purely by way of agreement between auditor and the client. So this is what regarding scope and objective. Who will decide scope and objective? So we have seen point of difference on the basis of meaning. We have also seen who will decide the scope and objective of the auditor. Now let us deviate from this for a while and we will go back to one more concept called independence, which we have already discussed. For a little span, we will deviate from the statutory, non-statutory. So we will go back to once again discussion regarding independence. So as we have told in the first class, audit is an independent examination. Independence means what? You should take the decision without any influence from others. So if you feel something as correct, you have to say it as correct. If you feel something as wrong, you have to say it as wrong. While taking the decision, you should not give importance to other person's wishes. You should not think what other person will think of your opinion. So that ability to take decisions without any influence, we call it as independence. Now we are going to elaborate this discussion regarding independence. See, independence will be of two types. As per the standards on audit, independence should be of two types. One is independence of mind and the other one is independence of appearance. Listen carefully, important topic. Independence will be of two types. One is independence of mind and other one is independence of appearance. Now what is independence of mind? What is independence of appearance? Let us try to have a look at it. First we will talk about what is independence of mind. Independence of the mind means the agreement in mind to act independently. What do you mean by independence of mind? Independence of mind means the agreement of mind, the state of mind to act independently. If I made a commitment in my mind, for example, I am doing some assignment. If I have made a commitment in my mind, I am doing this assignment, I will not let any bias, I will not get influenced, I will do this task in an independent manner. The agreement of mind, I am making an agreement in my mind to do the audit, to do that task without any influence. That state of mind, we call it as independence of mind. Like for example, if I have to give you a scenario for this, assume that this we are seeing that answer sheet example we are seeing while discussing this independence concept. So assume you are a student. Let me try to explain it here. So you are a student, you have written some CA exam, CA inter exam you have written. Your answer sheet, whatever is there. So your answer sheet will be there, no? That answer sheet has been given to your parent. That answer sheet has been given to your parent for the purpose of verification. Now, your parent is a very honest person, very sincere person. He or she has made an agreement in mind that, okay, this answer sheet might belong to my child. This answer sheet might belong to my child. But I will not show any partiality. I will not let any bias come into my mind. I will not show any kind of partiality. I will treat as if this answer sheet is of some normal person, and I will evaluate the answer sheet and give the marks without giving any priority. I will assume this particular answer sheet is any outsider's answer sheet. Like the way I will independently verify an outsider's answer sheet, similarly I will evaluate my child's answer sheet also. So your parent is a very honest person. He has made an agreement in mind to verify this answer sheet in an independent manner. This we call it as independence of mind. Your parent is having independence of mind here. Why? Because he has agreed in the mind, even though after knowing that this answer sheet belongs to his child, he has made an agreement in mind. I will not let any kind of partiality. I will treat as if this answer sheet is some outsiders and I will allocate the marks without any bias. So this agreement of mind, I call it as independence of mind. But independence of appearance means you should be visible to be independent. You should appear to be independent. What do you mean by appearing to be independent, sir? See, when you appear to be independent is when you are not related, when you are not having any kind of relationship, no familiarity, no proximity between the two persons will make you independent of appearance. That means you should not be related to any person, you should not be related to such a person in such a manner that where outsider will think that independence has been compromised. Now, if I extend this explanation to the same example, assume that your parent has agreed in the mind to verify your answer sheet in an independent manner. But is there a independence of appearance here? Independence of mind is there, agreed. But is there a independence of appearance? No. Here you are not appearing to be independent. Here yourself and your parent are not appearing to be independent. Why you are not appearing to be independent? Why? Because you have a relationship. You are having a what? Relationship. Your parent might have agreed. He's having independence of mind that he will evaluate the answer sheet assuming you as some outsider. Independence of mind is there. Agreed. But you are not appearing to be independent. What is causing independence of appearance to be not there? Existence of relationship between the student and the parent. Understood? So with this example, if I have to put it, independence of mind means agreement of the mind to act independently. Independent of appearance means no existence of relationship which will make a person believe that independence has been compromised. Or let me give you one more example for this. Assume myself and my younger brother, blood relationship. Myself and my younger brother, we both are working in the same company. We both are working in the same company, in the same team. Myself, I am a manager in the company. And my younger brother is my reportee in the same company, in the same team. So, I am a manager and my younger brother is my reportee. We agreed in our home. Before leaving to the office, every day we agree in our home. Hey, you might be my brother. But that is in home only. When we go to the office, I am telling, I am manager, you are my reportee. I will not show any partiality for you. Like the way I am treating all my other reportees, I will treat you also in the same manner. So here, between us, there is an independence of mind. We agreed in the mind to behave independently once we leave this house. But here also, even though we are independence of mind, we don't have independence of appearance. We are not independent of appearance. Why we are not independent of appearance? Why? Because we have a relationship here. What relationship we have? Brother. He is my brother. Even though we agree in the mind to act independently, but if a third party looks at us, he might believe that these two people are brothers, so they might be having some partiality between them. So this is logic which I am saying here. We are having independence of mind here, but we don't have independence of appearance here. What is causing the independence of appearance to be not there? Existence of relationship. Understood? So independence will be of two types, independence of mind and independence of appearance. Tell me guys, what is the meaning of independence of mind? Independence of mind means agreement of mind, the state of mind. If I am agreeing in the mind to act independently, that we call it as agreement of mind. What do you mean by independent of appearance? We should not have any kind of relationship. Not having any kind of relationship to compromise on independence, that no relationship between the two people, that we call it as independent of appearance. Now, why I told you about this independence of mind and independence of appearance? Why? Because we are going to link it here. See, if it is a case of statutory audit, if it is an audit required by the law, should the auditor be independent? Yes, auditor should be independent. Will independence of mind alone be enough, or independence of appearance also will be required? Or will only independence of appearance will be enough, or independence of mind also will be required, or both are required? What do you think? In the case of statutory audit, both independence of mind and independence of appearance both are required. Where in the case of statutory audit, independence is required, and which kind of independence? Independence of mind is also required, independence of appearance is also required. Whereas if it is a case of non-statutory audit, here also auditor should be independent, but independence of mind is enough. Independence of appearance is not a requirement, not mandatorily required. If you have it, it will be okay, but independence of mind is must. So if I put it with the help of example, assume a company audit is happening. Some company X Limited want to undergo their audit. There the auditor should agree in the mind to do audit independently, and also the auditor should not have any relationship with this company. Auditor should not have any relationship with this company. A company cannot say, I will appoint my relative as an auditor for doing the audit of the company. No, you can't say. Always an outsider who is not having any kind of relationship should be appointed as auditor in the case of statutory audit. So in the case of statutory audit, auditor should be independent. And what kind of independence will be required? He should be independence of mind also. He should be independent of appearance also. Whereas if a sole proprietor wants to get his accounts audited, he need not go to any outsider for getting the accounts audited. So if a sole proprietor is there, if he wants to get his accounts audited, he is having a brother who is a chartered accountant, he can get the sole proprietor's accounts audited by his brother. No one will come and question why you have appointed your brother as an auditor. Why? Because no one is asking you to get the accounts audited in the first place. No one is asking you to get the accounts audited in the first place. It is a non-statutory audit. Whether you get it done with the help of your relative, whether you get it done by an independent person, that is completely your choice. No one will question you. So in the case of non-statutory audit, the auditor should be independent, but here independence of mind will be enough. Independence of appearance is not a mandatory requirement. If you have it, well and good, fine. Even if you don't have independence of appearance, even if you appoint your auditor as a relative, that also is not an issue. Clear? So 3 points of difference we have understood. First, on the basis of meaning, statutory audit are those audits which are mandatorily required under law. Non-statutory audit, these are not mandatorily required, these are voluntary audits. In the case of statutory audit, scope and objective will be decided under respective law under which audit has been made mandatory. In the case of non-statutory audit, the scope and objective will be decided completely by way of agreement between auditor and client. And in case of statutory audit, auditor should be independent of mind and appearance. In the case of non-statutory audit, independence of mind will be enough. Independence of appearance will not be required. Understood? The same information will be presented in the answer here. So like if you quickly read it, audit is not legally obligatory for all types of business organizations. On this basis, audits are divided into two categories. What are the statutory, non-statutory? Statutory audit, the audits which are mandatorily required under law are known as statutory audits. What are the examples? Company audit, bank audit, tax audit, etc. Whereas if you look at the non-statutory audit, the audits which are voluntary, even though there is no requirement of the law, are known as non-statutory audits or voluntary audits. That means there is no requirement under law, but still if the client is voluntarily getting his accounts audited, that we call it as non-statutory audit. In the case of statutory audit, the scope and objective of the audit will be decided under respective law. Mistake here, guys, under respective law. So in case of statutory audit, the scope and objective of the auditor will be decided under respective law. Under whatever law the audit has been made mandatory, the same law will decide the scope and objective, and also terms of engagement. Very important discussion. They are saying that in the case of statutory audit, the scope will be decided by law and also by way of terms of engagement. Terms of engagement means by way of mutual agreement between auditor and client. See, I told you when explaining, in the case of statutory audit, the scope will be decided under only law. But here they are saying the scope will be decided even by way of mutual agreement between terms of engagement also. That means by way of mutual agreement between auditor and client. But the point here is the scope will be decided by law. Whatever scope that is decided by law, that is bare minimum. That cannot be reduced. That cannot be reduced. If the parties to the audit, that is, if the auditor and the client, by way of mutual agreement, if they want to extend the scope which is already decided under law, that could happen. By way of mutual agreement, if the auditor and the client want to extend the scope and objective of the audit, that can happen. But in any case, the scope and objective decided by the law can never be reduced by way of mutual agreement between auditor and client. But if they want, they can extend it, but in any case, they can never ever reduce it. One simple layman example if I have to say, assume that in the case of company audit, the law has told some 10 responsibilities to be fulfilled by auditor. Under company audit, the law has given 10 responsibilities to the auditor. Now, if the parties to the audit, like if the auditor and the client, if they want, they can extend these responsibilities. If they want to add 2 more responsibilities, they can add it. If they want to add 5 more responsibilities, they can add it. But in any case, by way of mutual agreement, the auditor and client cannot say, law has given 10 responsibilities, let us reduce some 2 responsibilities and make it 8. Can they do it? No. So the responsibility, the scope and objective decided by the law, that will be bare minimum. If the parties to the audit, that is auditor and the client, if they want to extend the scope and objective of the audit beyond the law, they can do it. But in any case, by way of mutual agreement, the client and auditor can never ever reduce the scope which is already decided under law. Understood? So that is what the meaning here. So scope will be definitely decided by the respective law, but if the terms of engagement, that is by way of mutual agreement, if they want to extend the scope, they can extend it, but in any case, they can never ever reduce the scope which is already decided under law. Now, what about non-statutory audit, sir? In case of non-statutory audit, the scope and objective of the audit will be decided exclusively by appointing authority through terms of engagement. In the case of non-statutory audit, no law, nothing. Whoever is appointing you, that person will say what will be your scope of audit. Like if I am getting appointed as auditor of a sole trader, that sole proprietor will say what I am supposed to do in the audit. If I am getting appointed as auditor of a partnership firm, that partners will say what I am supposed to do in the audit. So in the case of non-statutory audit, there is no law itself under which audit has been made mandatory. So who will decide scope and objective? The auditor and the client. They will sit across the table. Now the client will say what you are supposed to do. That will be your scope. Understood? And one more point of difference, in case of statutory audit, the auditor should be independent. And what kind of independence will be required? Independence of mind and independence of appearance. But in the case of non-statutory audit, independence of mind alone will be enough. Independence of appearance may be there, may not be there. If it is there, fine. If it is not there, then also it is fine. But independence of mind is enough. That means if you are appointing your brother, a sole proprietor is appointing his brother for conducting audit, the brother should have a feeling that, okay, I am doing my brother's audit, but I have to do this in an independent manner. That agreement of mind everywhere it should have. But there is no requirement of independence of appearance. The sole trader need not appoint always an outsider for doing audit. He can appoint relative also. But the relative, whoever is conducting audit, he should have agreement in the mind that I should do this audit independently. So that independence of mind will always be required, but independence of appearance might not be required in the case of non-statutory audit. Clear? So these are the various types of audit on the basis of requirements of law. So 3 questions we have understood from this chapter. Number 1, what are the points which are required to be considered before expression of opinion? Number 2, objectives of the auditor as per SA 200. Number 3, that is question number 5, we have understood what are the various types of audit on the basis of requirements of law. Clear everybody till here? So remaining questions we'll try to understand in our next sessions.